Good evening, all of you. Welcome to the weekly Roundup program. Let us see the important events for the week and the market behavior for the week, as well as we also look into the market behavior for the next week, also likely market behavior for the next week technically. So the headlines for the day: Sensex Nifty ended lower for the second day, but when you look into week-on-week basis, there is some appreciation. So it posted gain for the week. So this is the information which I'm sharing with you on week basis. Last week it ended up with 14,523. As you all know, that is the lowest level for the recent period, and from there it bounced back. Even though it bounced back, it could not retain the higher levels. Now it closed at 14,892. So comparatively, from 14,523, it is 14,892 on weekly basis. It closed on the positive side, but day-to-day basis, when you look into today, the market shed to close to 188 points, that is 1.25% loss for the Nifty, as well as Sensex also lost close to 576 points, losing 1.13%, ending up with the 50,269. Okay, so this is the market scenario on the weekly closing basis. Um, so market closed in this session. We will discuss about the indices, world indices, okay, sectoral indices, also India VIX and FI data. So all those things we will discuss in this program. So how the US market, now global markets will have a view. Um, Before I go to the global markets view, I wanted to just highlight you the opportunities which were available for us, which I also highlighted in the past. Actually, there are a lot of opportunities we are able to spot. One of the opportunities which I'm going to show you is the today's opportunity, what I spotted in the live program. So in the live program, every day 11 o'clock, I do the live program in the Extra TV at 11 o'clock in the name of Extra TV. And the opportunity we spotted for the day, that also I'll show you. Today we spotted the opportunity to go short at 15,066 with the stop loss out of 15,110. Also, we had an opportunity, we found opportunity at 14,882 to go long. No, that is the support level to buy. So both the opportunities have been, they would have played out. They have actually played out so nicely from 15,066, right? Exactly, it gave a opportunity to make an entry here and give 200 points. Actually, it gave, today's morning live gave 200 points fall from 15,066. This is a big fall, but 200 points opportunity. Secondly, in this dip morning itself, we have marked to go long here at 14,882. It went up to 14,983. Here also it moved up by 100 points. So a fall of 200 from the shorting level and move of 100 points. About 300 points opportunities were spotted today. I hope those who have observed this morning and live as well as the recording could have captured these points nicely. Okay, this is just added information which I am sharing with you. Every day this information is available for you, so I suggest you to make use of it. Okay, so coming to the global markets. Global market weakness we have been seeing in the last couple of days, and Dow Jones continued to become weaker. It lost 1.34%, ending up with actually 1.11%, ending up with 30,924, losing 345 points. S&P 500 also continuously falling, losing 1.34%, ending at 3768. Of course, Nasdaq is the worst sufferer. Continuously, it is falling to minus 2.11%. The whole of the week, IT segment, particularly this Nasdaq, which comprises of IT companies, saw a lot of downside. Okay, so this is the present scenario. Of course, a word about the gold. The gold started dipping, below $1,700 per ounce. That is another important information. Then oil also shot up. after showing some weakness, hitting the first $66.5 Brent crude on barrel. It came down even to $61. Now again it jumped back to the 65 levels. So this is the global market scenario as far as US market and gold oil is concerned. The European markets also follow the suit of the American market, where you could see there is no marginal fall in all the three major indices like FTSE, England index, DAX, German index, CAC, and French index. All were down by 0.3% to 0.8%. This is the European condition. Coming to the Asian markets, the important markets like Nikkei went down by 0.23%, Hang Seng also went down by 0.47%, and Shanghai is down by 0.04, Singapore is down by 0.03. So the kind of fall what we are seeing now, it's all happening with the influence of the global market. When the global market is showing a lot of weakness, that is also reflected in our market, but slightly on the higher side. Our market actually, when it's moved up also, it moved up so nicely compared with the Asian markets, but when it's falling also, it is falling so drastically compared with the other Asian peers. So this is the global market scenario. Some of the key points for the week. I want to bring it to your notice the U.S. Rising bond yield is the one of the important factor for the current situation. The bond yield actually came down to 1.4, then it started climbing. Previously, also it hit 1.6%. That was a situation where we saw the market crash. Our market also went down to 14,500 levels, 600 levels. Now, after that, the bond yield started cooling down, but from yesterday it started shooting up. The last 2 days it has been shooting up. But what was expected from the U.S. Fed Reserve Chairman Jerome Powell? Actually, there was a lot of positive information or statement expected from him, but he said nothing can happen. The inflation may go up. So all these statements really pushed the negative sentiment to the market. So markets start falling. Okay, so the important criteria you should keep in your mind is the interest rate. Uh, the interest rate will have the negative correlation with the market. That is, whenever the interest rate is increasing, market tend to fall. So that way, keep an eye on US interest as well as our interest are also likely to bottom out. This is another saying from the market that maybe end of March you will see some rise in interest rate. These are all the negative indication for the markets. So now the market turned bearish in the sense that technically it has turned bearish and sentimentally also it is looking bearish in general. But overall long-term trend is still up. So that way we cannot ignore the main trend. The sell-off, no, Friday, what you are seeing here, this is the impact of the global markets. The another negative points what we witnessed is the two-wheeler retail sales fall for fourth straight month. Actually, the auto sector is the first one to give the indication about the economy, whether it is going towards the negative side or moving towards the positive side. The auto sector is the one to first show the sign of weakness and also the strength. So currently it is showing the weakness. The FII and DI scenario, of course, FIIs are the main concern for our market. Whenever they buy in bulk, market goes up. When they sell in huge quantity, the market falls. So currently, when you look into the FI's buying scenario, you could see that from 1st March to 4th March, uh, there was, you could see the buying area here, but actually, end of the last month, they sold to the tune of 8,000 crores. So that selling only pushed the market to 14,600 levels. Now their gradual buying pushed the market back. but technically we call this as a pullback rally because it showed the lower bottom and now start moving up. So in that context, it is looked at as a pullback rally. So pullback rally has come to an end. Then the reversal is happening. Now we'll have the sideway movement with the negative bias. That is the current scenario. Totally for this month, the total buying by FI is 4,213 crores. The domestic institutions were the total sellers of 1,444. No, this is the scenario of the DIA and FIs. Okay, now let us see the rise and fall of the PSE banks. PSE banks were showing a lot of strength. It started going up so nicely last week. So when the Prime Minister gave a statement about no monetization and privatizing some of the banks, all that news really triggered the market, particularly the sleeping giants, PSC banks, which were in the lower part of its price range for a very long time. They started shaking up and slowly moving up. But again, the reversal start happening. So we should look into very closely any change in the government policy which will favor the market sentiment. So this is a list of the public sector banks which started falling. You could see here, out of all these banks, generally people will have the interest on Bank of Baroda and the Indian Bank. Only these two banks will show some kind of strength and coming back. But all other banks are showing a weakness. You can just keep in mind how to follow those selected banks. Okay, so let me now move on to the futures Nifty analysis. Oh yes, we'll take it up. We'll take it up. SBI. Right. So now I'll go to the chart and we will discuss about Nifty first, then other sectors. Now you are watching the Nifty chart. So when you go to the Nifty daily chart, you could see so today it ended up as a doji. So intraday I showed you in the live program. I was just now showing the same levels. This is the same chart of what I was showing in the live market at 11 o'clock. So when I was explaining at 12:44, it gave a hit. So 12:44, it gave a hit, short entry. Then after that, it was a fall further, fall, came down to 200 points. Then this is the buying area marked in the morning itself. So price got into those buying area and reversed and gave 100 points. This is the 200 points fall and this is the 100-point rise. So the intraday trading opportunity gave 300 points, and how much you capture, it's up to you, but still just showing the opportunity. Okay, so I'm coming, I'll remove all those things. Now, let me come to the daily chart. Look at this, how the daily chart is behaving. Now the trend wise, if you look into, we are the uptrend. Even I happen to put one moving average. Probably I put one 50-day moving average. Okay, now look at this. This 50-day moving average was giving a consistent support for the market. You could see here, this is November 20, and when it crashed, and January 29th, January 2021, it rebounded, and again this 50-day moving average was giving sign of strength when it was crashing on 26th Friday, last Friday. So all the scenario, this 50-day moving average was giving enough strength. So the same can still give that kind of support. It's a question now. For one reason, you'll have to be very careful now, because there is a strong resistance developed here. So the top, what we are seeing, created a strong resistance. So 3 days back, the effort or attempt by the bulls to cross a level failed, and price started falling, ending up with the doji. No, it's a spinning top under doji. Now the 50-day moving average is likely to act as still a strong support area, and this is the crucial point for the market to reverse. This crucial point level is 14,000, okay, 590. This is the crucial support level. So this is a very, very crucial support level, and if market breaks this, there could be a substantial fall. The fall is going to be substantial, and it may even go and touch this area. That is, this is the next support area. It may move towards 13,867 levels and 13,692 levels. This is the next support area. What we are discussing is the futures Nifty. So another substantial big fall on the cards if market breaks 14,590. So let us also look into the weekly chart of this week chart of the candle. You could see there is a candle. This is a spinning top. Again, it is showing uncertainty. The only difference what you could see is the selling pressure on the high side. This is the long wick. Okay, these both the wicks are saying that there is a selling pressure when the price moves higher levels. So this is the weekly candle scenario. Let me also see how the month is. Okay, so weekly we are seeing uncertainty, and daily I showed you the important support, and if it breaks where it can hit it. At the same time, today's candle is a doji. Today's candle is a doji. If you have a bigger picture, this area 14,978 to 14,864. This is the crucial support for the market. So this is a very crucial support for the market, and market trying to defend only this area. So if this area is defended, then it can move towards sideways. It can move towards sideways, and it can go hit the recent high. That is 15,380. So this is its resistance level. So this is how you are looking at the market. A break below to this 864 could lead to 14,590. If it breaks, there's a big fall. And if it's able to rebound from here, it can go towards again this 15,380 levels, which was its previous high. So this is the Nifty analysis as a big picture. We also look into the intraday opportunities. I'm going to the intraday trading opportunities now. So I'll just go in detail about the intraday opportunity. Let me closely watch the intraday opportunity for the day, Monday. So market formed a support level, which is now defending. The level the bulls are defending is 14,894 and 14,839. So on intraday basis, this is where we should look into. If these levels are not broken, you can be a buyer and seller. So if this support level is broken, then you should go for short. So this is the scenario. At the same time, we have strong resistance level at this area. Although there is like a testing indication here already tested, it could be a feather touch. Still, this act as a strong resistance. Okay, this is 15,062. So this is the immediate resistance area. So those who want to attempt a short here, they can attempt a long here and where I have shown. Not in a hurry. Plan it and execute it within your risk management. Okay, this is the scenario for our next week Monday trade. I'll save this file also. From next week onwards, we'll discuss about these marked charts. Okay, I save this. This is for next week. Starting from 8.3. Okay, this is the scenario for Nifty. Quickly, I'll go to the other sectors. Then we'll take up the stocks. Okay, so now we'll move to sectoral analysis. So let me start with the banking sector. So the banking sector, let us look into the daily chart first. Of course, last week when we are discussing, I was just explaining you how this area can act as a support. It acted as a support and moved up, and it came to the same area only. Let us see if it is closing the lower side again. That could be a substantial fall, bigger fall. Okay, so we'll go to the next automobile sector. Next sector is automobile. So I was explaining you about the automobile sector last week also. I said it broke the trend line, and every time it bounces back, it could be a relief rally or it could be a pullback rally. That selling pressure may come in. That's what is happening now. There is a pullback here and being sold into. This is actually a relief rally. What we are seeing. The next sector which we are going to see is FMCG. Okay, so I was explaining you last week FMCG weakness. I also marked some area where it can bounce. Okay, so FMCG, it dipped and started bouncing, but little early. It started bouncing little early than the area what I marked. Even though it bounced, still it is only a pullback rally where it is showing the overall weakness after, forming a double top formation and breaking the neckline, start falling. Now, currently, the race is only a temporary phenomena as far as we are concerned, but we'll have to keep watching this high. So, if this high is taken off, then rally may continue. So, this is how we are looking into FMCG. Then we'll go to pharma. Okay, so last week I showed you how it is behaving. Pharma, it made a lower top and start falling. It's a key support area I marked here. Currently, it is testing the support area only and sitting on this testing area and start moving up. So, pharma as such, with a lot of weakness. All the bounces are only a temporary bounce. Then we go to the very important sector, IT. All are important sector only. Okay. So IT is also in a narrow zone between the support level and the resistance level. You could see here, after forming a resistance, second attempt, it came down. Again, the same support level what we have drawn here, to the same level as support and start bouncing. Okay, this is the scenario of IT. Finally, we'll see metal. So metal used to be a king. Metal used to be the king. Let's see the weekly chart position. I just wanted to see how the weekly candles looks like. Okay, so finally we go to the metal. So metal is the king as such. It was making a nice upward momentum, but today it start falling. Though it is falling, we are looking at this level as our buying area. Okay, last week to this week, we don't see much of change. What are the lines we have drawn? It remains same. So this is the final sector of the sectoral analysis. Quickly, I'll touch IVIX, India VIX. Okay, so India VIX, I kept explaining to you that the volatility increased from 19th Feb. So 19th Feb, the volatility increased and came down. Again, aggressively it went up. Again, it was nullified. It came down. Again, this is the next journey. So the next journey of India VIX is playing a role of higher volatility. Okay, I'll just take you to intraday to make you to understand. You could see here when the market was falling, it was rising in the morning. In the second session, when market is recovering, and here it is falling. Okay, this is the scenario of India VIX. It is working, no, against or in the opposite direction of the Nifty all along. Okay, so this is the India VIX. Volatility is increasing, and yesterday and today 2 days there's a big green color candle indicates higher volatility. So you'll have to be careful. Okay, so this is the important sectors which I wanted to highlight for you, and I hope you would have enjoyed this weekly roundup presentation.